Hello friends and welcome to my channel Simply Stocks, and today I'm going to talk about Green Panel, which could create wealth from these valuations. I think the stock has fallen a lot, so let's understand about the business. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Green Panel, here's a small request. Kindly support me on Patreon. Once you do that, help me grow a channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and there are a couple of watch lists that I have built up now. One for the small cap stocks and the other one for the mid cap stocks. Plus, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with the fee. And also through Patreon, you can ask me questions on an everyday basis. You can also get WhatsApp membership. If you can email me, I'll let you know about it. It's a yearly membership that you have there. So you get all benefits of Patreon on WhatsApp. Now about the company established in 2017, a very recent, you can say, company, have more than 3,000 outlets around India. Green Panel is the largest manufacturer of wood panels and uses renewable agroforestry products for making making these products, and they are slightly expensive, so they have good margins. The market cap of the company is around 4,000 crores. It is a pure economy play in my respect that once economy picks up big time, the company is going to do extremely well. If you look at the numbers, these are Q2 numbers. So 20% growth in sales, but profit went up by only 7%. This is the basic reason as to why the stock has fallen so much, that the profitability growth is reducing from around 20-22% all the way to 7% now. But there's decent combined promoter and institutional holding. ROE of around 29% is still robust. Margins at 26%, as I explained, is pretty good, but there is margin pressure that is coming in, and the sales growth hasn't been that great that for profit to surpass. Plus there are other, you can say, cost of interest and depreciation that are denting the bottom line numbers. So why I believe the stock can be big. So green products will remain more in demand as we go forward. So in the next 4 or 5 years, this could generate a lot of wealth because once people or government, especially in India, recognize that how important it is to save the environment, etc., which it looks like we are heading towards there with a lot of investment towards renewable energy. These types of green products will get a fillip by itself. Long-term housing demand is intact, and I think demand will only pick up going forward. There has been a lull for the last 6-8 months, and especially during the pandemic, things were not that great. But I think 4 or 5 years down the line, you'll see that long-term demand of housing will initiate a long-term demand for such wood panels that a green panel makes. People are looking for new innovative living spaces and the kind of decorative, you can say, products in order to put in place for their houses. So that's where this business comes in. Strong operational numbers in a difficult economy show strength of the business. So numbers have not declined because there are other plywood companies where numbers have declined sharply, but here we are seeing some sort of a growth. Yet the stock has fallen, so the value for the stock is pretty good, and the valuations are becoming cheaper for this sort of a company. It has been gaining market share for the last 4 or 5 quarters, and currently it is only trading at 2 times sales, whereas it used to trade at 4 to 5 times sales. So that on that basis also, it is coming pretty cheap compared to what it was, say, 18 months or 15 months back. In terms of valuations, current EPS for FY22 is closer to 19 and a half rupees is what is expected. FY23, I would say that the EPS could be closer to 24 and a half rupees. Currently, it is trading at only 14 times earnings, so not very expensive. And 2024, I believe, will see further growth in FY24, and we could see that expected FY24 EPS could be closer to nearly a 30% growth. I expect 25-30% growth. So we expect that 30 to 33 rupees you can say earnings could come in. So even if it trades at 25 times earnings, this could be headed towards 800 rather than being at 300, 350. So I believe it's a doubler by 2024. In 1.5 years, it could go really big if the numbers hold up. So again, the caveat here is that the numbers should be pretty strong for the company to do well. If the numbers are not quite to our expectation, then we have to revise the target. So kindly do have a look at as to how the numbers pan out for December. Do analyze yourself as to how things will pan out, and then take a call on the stock. But it looks like that from here on in, the stock could easily more than double and bring you a lot of profits, probably 18 months down the line. In terms of technicals, it has been an underperformer and have been falling for the past few weeks. Major breakout is expected above 400, and it may consolidate for a while. So it's not a short-term trade at all. It is looking extremely weak on charts, but long-term players can get in. If somebody has a 2 to 3 year time horizon, can probably get in with a stop loss. Kindly do keep stop losses for all your investments and trades so that you don't lose more than 15-20% on any one investment or trade. That is extremely important. So what needs to be done? I think buy only if you have a 3 year view and if you are a slightly risk taker, because this is a small cap company that hasn't been doing well. The stock hasn't been doing well, and the company and the numbers have not been that strong. So may see consistent 25-30% yearly growth for the next 2-3 years. So by 2026, you might see the stock flying high, but for short term players, it is a complete avoid, because I believe that if the market slightly goes down, if the market goes down by say even 2-3 percentage point, then the stock could go down 7 to 10%, and that would really hurt those players who are buying it for short term, because your stop losses would be triggered. So in my opinion, this is a stock to probably have around 3%, 2-3% of your holding, and let's see how it goes around. If it really does well, then you can make around 2.5-3 times on the stock in the next 3-4 years. Your time horizon should be at least 3 years in order to make money in it. So I think the sector will be in a long term bull run. There will be, you can say, growth pangs, there will be a lot of hindrances, but going forward over the next 3 to 4 years, you will see infrastructure and real estate growth in India, and especially the kind of work government is doing in terms of road transportation and road infrastructure plus into housing. I think this will end up doing pretty well. The only thing is what would be the time frame, and that is where I am not that confident that it could happen over the next 12 months or 6 months or something like that. The stock could very well reverse and do very well over the next 6 months, but I believe if you are buying into a small or mid cap company, then you better give it something like between 2 to 4 years in order for it to perform, rather than think about buying into it with a view of 6 months and thinking that it's going to now perform because I have bought into it. So that's the call. Buy for 3 to 4 years, should be performing, and have your investment, you can say, around 2 to 3%, and that's just about it. Allocation should be around 3%. So this is my video on green panel. Please like and subscribe my channel and hit the bell icon so you can get my video straight away when I post it, and kindly do support me on Patreon. Thanks a lot for watching.